Rebecca, we've heard this kind of sentiment for a long time now in terms of, market dynamics and letting some of these firms essentially become more market-oriented by failing. Why the timing, and is the intention that they'll actually get tough now?
Yeah, I think that's a really important point to make. In some ways, this sort of attempt for financial discipline in its capital markets and this pickup in default, that's a return to a dynamic that we've seen China try to enforce for quite a long time now. And in fact, in some ways, this pickup in default is just a return to what we were seeing in 2019. In terms of, I think, why now, I think there's a couple of things going on. Obviously, with the coronavirus hitting China very, very hard, particularly in the first half of 2020, we saw a lot of measures that were introduced specifically to sort of avoid a wave of default and avoid things getting out of hand and essentially to stabilize things. And now that there are signs the economy is improving, in a way, China is able to get back to the business of what it was doing really at the end, particularly at the end of 2019. And the other dynamic, of course, which is sort of ongoing, is this tension between China and the US. And of course, this kind of tension and concern that China is being quite heavily relying on US markets for fundraising for quite some time now.
So what kind of things is China doing to clamp down, and what does it mean for companies this year?
Sure. So there's a lot of sort of several measures, particularly aimed at the debt markets and improving discipline in the capital markets, and particularly aimed at sort of punishing firms who aren't necessarily up to scratch. So China's tripled the maximum prison sentence for securities fraud to 15 years. So it's a significant change. And it's also proposed shortening the delisting process for unprofitable stocks. And we've also seen a big push to improve oversight of the China's local credit rating industry, which, nationally one of the regulators have been coming at quite hard recently to try and improve. And so what we're expecting is that smaller, weaker firms are going to be hit hardest, those from the poorer provinces. And particularly for the property sector, what we might start to see is some kind of polarization between the smaller, larger firms and potentially even some consolidation as well this year.